Welcome to This Explainer. If you really look at your everyday financial life, banking often kind of feels like a totally free service, right? I mean, you deposit your paycheck, tap your card at the grocery store, check your balance on a sleek little mobile app, and withdraw cash basically whenever you want. On the surface, it really looks like the bank is just doing you this massive favor for absolutely nothing. But behind that everyday illusion of free banking services is a brilliantly designed, literally billion-dollar profit engine. So today, we're going to peel back the curtain on exactly how that engine operates. It's a fascinating question, isn't it? If they aren't charging you directly to just hold your money or use their basic app, where does the bank actually make its profit? Well, the reality is that every single time you interact with your bank, you're actively participating in a highly tuned system designed to generate revenue. In this explainer, we're going to look primarily at the absolute core of this system, and we'll be heavily focusing on the true heavyweights of banking revenue, interest and fees. Okay, let's dive into this. Here is our roadmap for uncovering how this works. First, the banking bridge. Second, the power of interest. Third, the interest spread secret. Fourth, revenue through service fees. Fifth, credit cards and investments. And finally, number 6, is your money safe? Let's jump right into section 1, the banking bridge, moving money through the economy. So, to truly understand bank profits, we've got to look way past that old movie trope of a static, giant steel vault. As you likely know, a bank is actually a highly active financial bridge. It connects those who have capital to save with those who have a need to borrow. By securing deposits while simultaneously deploying them right back out as loans, banks keep money continuously moving through the economy. They are essentially the ultimate middleman. And let me tell you, the middle is a highly, highly lucrative place to be. Which brings us nicely to section 2, the power of interest, the biggest source of income. Let's move to this and see exactly how it builds. When capital is needed for, say, real estate, buying a car, or funding a commercial venture, the bank steps in. They deploy that capital, but obviously at a cost. A $10,000 loan at an 8% annual interest rate mathematically locks in profit over time. That premium, the interest, is the absolute primary heavy-duty engine of bank profitability. It's their direct reward for lending out that capital. Now for section 3, the interest spread secret, or what we call the silent profit margin. There's a deeper, incredibly fascinating layer to this whole interest engine. Now, what's really interesting about this slide is the contrast. Imagine you deposit $1,000. You might earn a modest 2% yield. Hey, not bad, right? But the bank immediately turns around and lends your exact same $1,000 to a borrower, and they charge them 7%. This right here is the most crucial, yet often completely silent, driver of banking revenue, the interest spread. It's simply the mathematical arbitrage between the yield they earn on loans and the yield they pay out for your deposits. So in our example, that 5% difference in the middle, that is the bank's margin. And when you multiply that by billions of dollars, 24 hours a day, this spread is an absolute goldmine. Moving on to section 4, revenue through service fees and the power of volume. So if interest is the heavy machinery of bank revenue, service fees are sort of like the relentless swarm of worker bees. Just look at this list. Out-of-network ATM fees, monthly maintenance charges, wire transfer costs, credit card annual fees, late payment penalties. I mean, individually, a $3 ATM fee or $15 monthly charge just seems like a minor friction cost, right? A total drop in the bucket. But consider this. In recent years, banks have collectively pulled in tens of billions of dollars annually from overdraft fees alone. Crazy, right? So the crucial point is that banks operate at a truly massive scale. When you take those seemingly tiny micro fees and multiply them by tens of millions of active accounts, they generate billions in aggregate revenue. It's the sheer volume of daily, routine transactions that turns these tiny little annoyances into a secondary but absolutely vital core pillar of profit. All right, section 5, credit cards and investments, going beyond the checking account. Because honestly, that plastic in your wallet is a major profit center all on its own. Banks collect steep interest on revolving credit card balances, and they take a tiny cut, a transaction fee, almost every single time you swipe at a merchant. Furthermore, they don't just leave excess deposits sitting idle. No way. They deploy them into relatively safe financial assets like government bonds, which generates even more yield on top of their traditional loan portfolios. Finally, section 6, is your money safe? Let's talk about regulation and stability.
Because a very natural question to ask right now is, well, if the bank is constantly deploying my deposits, what happens when I need more money? The answer lies in strict regulatory frameworks. Banks operate under reserve requirements, meaning they are legally bound to hold a specific percentage of their funds in liquid cash at all times. It's a carefully stress-tested balancing act, perfectly designed to maintain systemic stability and to make sure your capital is totally accessible whenever you need it.
And this brilliantly illustrates the whole picture. When you step back, the diverse ecosystem of banking revenue becomes crystal clear. You've got the heavy hitters, interest on loans, and the silent margin of the interest spread. Then you have volume-driven service fees, those dual-threat credit card revenues, and strategic investment returns. Put all that together, and these elements form a highly effective machine that turns basic financial utility into just immense profitability.
Understanding these income sources completely changes how you view the entire financial system, doesn't it? The bank is providing you a bridge, a safe place, a really convenient app, but they are absolutely monetizing that relationship every single step of the way, primarily through those powerful engines of interest and fees. So I want to leave you with this final thought to ponder. Next time you open your banking app to deposit a paycheck or pay a bill, ask yourself, who is really working for whom?